Alright, good afternoon and welcome to the end of day review for today. And today is May 31st, 2024. It's Friday, last trading day of this week. And it's also the last trading day of this month. It's May. Is that wonderful? May is complete. May is gone. And now we go into June. So June is our last month of the second quarter right there. And today we have a giant move back and forth. That's amazing reversal. Before we go into charts, let's go into the economic calendar so we know what drive the markets. Because the markets move based on the economic events, the data released, then it's react. But where the markets ingest volatilities or liquidity right there. So today we have so-called PCE at 8:30, personal income. Personal income, or they say PC is personal PC personal consumption expenditure. So look at the day before that. Which is Thursday, we have a GDP data release, which is less than expected. Expected is 1.5, but the consensus expected or consensus right there, but it actually only 1.3. Basically, the economy slowed down. Then today we have the BCE, which is personal consumption expenditure right there. So the consensus is 0.3, but it's actually a 0.2. Basically, this is another indicator of the inflation. Yeah, before it's 0.8, but this time it really dropped right there. The inflation really dropped right there in terms of personal consumption. And until today, we didn't pay attention to this economic event. We didn't know. Just be honest, we're not aware of this, but now we're gonna incorporate into our economic or trading calendar right there, because what happened today is show us that this data really impact or really drive the market. It can be we can see this as a very high impact news. Before that, we are unaware, because not this one, but here this one, personal consumption price. So basically, it measure the goods and services that U.S. consumer like you and I, we pay for goods and services like rent, food, clothing, all kind of that. They measure that. So the release today is 31st, basically the last Friday of the month. Let's see, the last Friday of the month. Last Friday of the month. Yes, 28 is the last Friday of the month, and 31st is the last Friday. So it's basically the last Friday of the month, and then the first Friday of the month is gonna be non-farm payroll. Oh, now we see. So it's very critical when we try to trade the last week of the month and the first week of the month. That's very critical time. A lot of liquidity, a lot of volatility. So if we can catch the move, or we can lock our profit right there. All right, the next data we're looking for, which is the first Friday of the month, which is a non-farm payroll right there, which is on June 7. And then after that, we're looking for the Fed meeting on June 11 and 12, and also on the 12th, we're looking for the CPI data. So the next 2 weeks gonna be huge for us, right here. Next 2 weeks, for the matter, yep, right here. Next 2 weeks is gonna be huge because we expect that the Fed gonna make some decision. Some people speculate that the Fed gonna make decision whether cut the rate, but some other that maybe they'll leave it until September. Let's see what the meeting, September, 17 right there. So let's see. Yep. Yeah, we just have a lot. Basically, they say that market rallied today because the inflation data cool up. But it's amazing that now we go to the chart right there. Amazing that it reversed. You see, at the first move when the data come out, we see a huge up move right here, and then it starts sell off. Wow, 21 point right there. Yep, that's that level. I mean, we can go long right here. You see that break level, retest, and now go there, put a buy stop right there, and right into this. But huge right here, reverse right here. It start around, this was around 12:30 noon. It reversed. We catch this move, but we take profits very quick. I know, but we have to learn to manage our greed right there. We that's the thing that we need to manage, because if we manage our greed right, then we'll be success in trading. That's the tricky one that we are working right now. We can make profits, but we give it back. The reason we give it back because we let the greed really drivers take a very aggressive or force trade or over trading right there. All right, let's look at what opportunity we have today. We took 5 trades today. Let's go to the trade that we took. Let's look to see the last trade we took, trade number 5. So basically, here's the trade we took. So basically, hold on, is that the trade today? Let's close all of this. So is it May? Yes, this is the trade we took around 12:30 right there. So basically, we see that it is a reversal right here because it's completely clear out all the sell side liquidity. And you see the level right there at 52.1225. So we have a decision to make right here. basically it's break that level and that break right there, and then you have reversal, and which is very strong, which is in this case engulfing candle right there, and then you have retest from above. Because there's no retest from below, that's the reason why you have a retest from above before it go. And exactly we put a buy limit whenever we see that it retest from above and reversal, which is it just retest before it go up, not to break it. It just retest. It tap the level before it go up, and that is the distinction we need to make. When the retest from above is to break it, right? We have in a scenario when the retest from above gonna break it, and in this case the retest from above is not to break it. It's just because there's no test from below, so you have to retest, tap that level before it go reverse. So that is the very unique distinction that we learned today. We haven't learned this before. We always thought that the test from above is in order to break it, but it did not always the case. In this case, the retest from above in order to continue the reverse. This is reverse right there, and one of the reasons we put right here that the retest from above, because there are no retest from below. I said you have to tap right there. And let's look at the recording we have. Alright, so here's our the trade number 5 right there. So you see that as soon as we saw the very huge engulfing candle and the one that break the last level at 52.12.25 is have a rejection from below. So we know that we're gonna put a buy limit right here. It's gonna retest that level before it tapped the level before it go up. So that's two scenarios, right? It retest from above in order to break it, or it just it retest from above in order to continue to go up, follow the trend. You see, we put a buy limit right there. So in this, if we want to go in, we have to use the buy limit. We don't use the buy stop right there. If we want to buy stop, then we have to put at this level at this time, at this candle with the buy stop right here. Because it break this level, the only reason come back is to break it. It break it, and then it do retest from above before it continue rolling. You see that? So we get in. Man, the minute we get in, we get that's beautiful right there, up the buy limit. The minute we get in, we're in the money right away. So we set a risk reward ratio 1 to 2, which is risk 1,000 to get 2,000. That's the reason why see the 2,000 right there. But we look at the level, we move it to 21. So right here we look at the level. See that we move our target to 21 right there, 21.25. Right, the reason when we move to 21.25, 21.75 right there. Okay, we know that you see it retest from below. You're gonna you're gonna reach that. That's low hanging fruit right there for sure, and that's what exactly we do. But we're very careful. We're gonna put 2 pip, right? 1 pip is a quarter of point right there. So we put 2 pip below that, so make sure it hit our target. So we put at 0.25 right there instead of exactly 75 right there. So we still want to make sure our target hits. That's it. And beautifully it hit. So this trade is only 13 minutes. We have a nice and handsome profits right there. to, yeah, yes, so 2100 right there. But if we let it run, we're thinking about let it run, but we tell ourselves that let not be greedy, because we want to practice that. You know that you can let it run, but you don't want. That's how we learn to control our, manage our greed right there. You see, if we let it run, it's gonna be huge. Man, it's huge money right there. But anyway, every day the market give these opportunities every day. You don't have to be FOMO and greed right there. All right, let's see the trade number 4. Before that, we take. All right, here's the trade number 4 we take. Basically, we go in here. We're going to go long. The reason we want to go long because we saw, wow, it retest from, yeah, we're going above 11.15 right there. Yes, we go long right there because we thought, wow, it's gonna be reverse from here, right, at 11 right here, because we see that the retest from below that level. We thought, all right, it's gonna retest from, it's gonna be reversed from here, but we're very naive because you see the huge down move here. It's gonna make a second leg down. So this one is just another retracement before make second leg down. So we naive right here, there, and we go long right there. But it's a FOMO trade. Even though we go long, but there's no setup right there. Let's be honest right there. It's no setup. So we're breaking our rule right there. So we have to hold ourselves, accountable, be disciplined. If the trade is not in ourselves, don't force. Very tempting, right? Because you see huge down move and you're thinking to yourself, wow, it's gonna reverse because because it's too low right now, right? That's what we're thinking in our head. But you know what? The market doesn't think the way we think, because we don't know. We don't know the people who run the algorithm what is they are planning. So we thought that we may stop right here, but actually not. So we have to be aware of that, aware of our bias right there, our so-called automatic response right there. So we have to be aware and learn to manage. Otherwise, it can become automatic. We have to be aware of that and fix that automatic response in order to become a more successful trader right there. So basically, we don't feel right, and when we don't feel right, we close the trade. That's one of the technique that we need to work on. We cannot just stay in the trade because we make a mistake. When we feel like the trade is not right, and as soon as we know that we are FOMO, we get out no matter what happened. And we did. See, we closed the trade. Yeah, you see, we closed trade. Forgot about it. Yeah, so we closed the trade. So we give ourselves a credit right there. We closed the trade. When you don't feel right, get out. No matter what happened. Yeah, when we get in, we feel like we make a mistake, so we get out. So we give ourselves credit right there. All right, let's see trade number. All right, trade number 3 is similar like trade number 4. We're so eager to go in when the market is still not finished the sell-off. We go in the middle of sell-off. We go long. We so FOMO right there. And that is the bad habit that let's say that way, the bad habits or the automatic response in our subconscious mind right there. So we have to identify it, be aware of that, be mindful of that, our automatics, so we can manage them. right there. It's manifests right there, manifests itself right there. And you see that we go in we go in when the sell-off is just finish the first leg and gonna make second leg. And we go in, you see that there, we go in with big 5 contract right there. And because we thought that, you know, it retests, basically break the level at 33.50 right there, and it's at from below. So it's gonna what? And you see the sell side right there. So it's gonna rip it up. It's gonna reversal. That's our you know, at this level also. That's our naive inexperience right there. We should be way more patient. And you can see that it stopped it out. Boom. It stopped it out because we hit you know, daily right now. Daily last limit is you know, 4,500. But anyway, it's a paper account, so we can reset them. So here's is the huge lesson for trade number 4 and trade number 3 right there. Yeah, we're going right here, just the same mistake. Stop out, and then we try to re-enter again. That's trade number 4 right now. Trade number 3, we go in right here at 11. We thought, wow, it's retest from below, right? It not quite yet. So it make it look like that, but it didn't. And we pay price for that. So we go in right here to trade number 3. Trade number 4, we go in right there again. And both that we get stop out. So after the huge move, let it finish the second leg. And that's where we catch the trade with trade number 5 right there. Alright, let's see trade number 2 we take. Alright, here's trade number 2, and it's another instant where we let our FOMO, or you know, FOMO, you know, drive our decision right here. Because the idea that you say, okay, we see right there, so we go in right here. Yes, because as soon as we saw this pullback above the level right here, basically we say to ourselves, all right, it failed to rate the buy side, now it's rate the sell side, they're gonna reverse. But that's the FOMO, the setup, that in order for this to be a fall breakout at level, you want it to retest from below. But we completely throw our rule out of the window. Our automatic response to take over us right there, to click right there, FOMO right there, you just click it. So we have to be mindful of that. And you see, that's no setup right here. How do you know, how do we go long right here? There's no reason to go long any level. How should you go long? You want it to be retest from below. Let's say it breaks this level, we want it to retest from below this level. Right? What other level is break? Why you go long right here? Now we really see that the automatic response for our subconscious mind, you know, drive us to make, you know, a very bad trade right there. So we have to improve that. That's the reason why we do review, to help us to reinforce, to identify the automatic response when we trade. So we have to eliminate all the bad habit right there in order to improve ourselves right there. And it is a process, and it takes time, it takes practice. There's no shortcut at all. Every trader, every great trader, they have to go through this. They have to blow up the account multiple times. And there's no you know, shortcut right there. You know, for some maybe it take longer and all that, but it's the process we have to go through. Flush out our you know, so-called automatic response from our subconscious mind right there. It's hidden from us until we trade. It show up right there, and that's the reason why practice really help. Yeah, this is just a bad trade right there, very bad right there. And you can see, you see, we're so confident. We move our target up there. We say, wow, it reversed from here and it go. That's one of the reasons we don't like the Top Step Act is that they put the profits number. We don't want that. We want at a pawn much better, because when you see profits, it's kind of cloud our judgment, our decision right there. When you see the profit, you just see profit. You don't see the risk. You don't see that we violate our rule. There's no setup right there. What we're doing right there? It's just amazing that sometimes we make a decision, but we don't know why we do that. That is because the subconscious mind, our subconscious is automatic response. Yeah, right. You see greed right there. Oh wow, it's huge profit, so click it. We have to be mindful. Yeah, pay pick right there. See that? That's trade number 2. So huge lesson learned for right there. Let the first line. And that's leads to the setup that we only see for today. Let's review this setup. Right here is beautiful setup, and the first time we saw this kind of setup, and we give it the name right here. I think like this. Okay, so we got that. So this is the setup. Now normally you want is this a real breakout at that level, right? It break that level, you see that 52 65 25 and the low time frame right there. This level, it break it and then it reverse and then it break it. So it matched with the signature of a second leg down. And the reason why you see that it happened when you see the reverse, you know it's going to be second leg down, because you see that the liquidity buy side, it haven't touched right here. I think ICT call this intermediate term high right there. Intermediate right there. So he haven't touched that, reason why it formed this setup. Yeah, I think we put the note right there. Yeah, basically this move, this swing haven't touched the buy side or the high right here. That's the reason why it formed this reverse right there. Otherwise it's gonna be a fall breakout like this, right? It break the level and it tests from above. That's happened when it have a buy side series whip right there. This right there. Yeah, I think we need to distinguish this, differentiates these two scenarios, so we know. Let's do that. Let's edit this so we know. So basically right here, we have a signature right here. One is break. So whenever we see a real breakout, we will see that. No, it's a fall breakout. Yeah, it's a fall breakout right here. Right, a break, and then you have a retest from above. In this case, we have 2 times right there. And then the third step, then we have reverse. That's the signature. The reason why it formed this setup because it did break. So yeah, the reason why we call real breakout at this level right here at the, but for this it's gonna be a fall breakout right there. It's much easier to say right here that is a fall breakout right there, and right here is yeah, we call it real breakout because it already break that level before, right? It break that level, and now it's gonna be a real breakout level because it create a second leg down. So that's an idea right there. But if you think about this move, you see that it's gonna be fall breakout. So it's depend on the context. Right, if you look at the context, you say it's going to be a real breakout, but right, look at the context, you say, oh, it's fall breakout. The same right here. If we look at this context, we call this a real breakout at leg level. Okay, break that level before, so it's going to be a real breakout for second leg down. Or if you will look at this context, we say, well, it's a fall breakout because this is go up and a fall break right here, it reverse. So it pretty much depends on the context whether it's going to be fall breakout or real breakout. It's very subjective right there. Yeah, it's 2 times, but in this case it's it break reverse, it break. Oh, the reason why, because notice right here, yeah, let's put a note right here. Just note there's no buy side really right here. See that? It not rate this one, but for this one it rate the buy side right there. Yeah, so this no, we say that no, that's buy side of really is rate. It rated. See that? Buy side we rated for this case. For this setup, it doesn't have. So whenever we see that the buy side we were not rated, then we looking for this setup. But if you see the buy side we were rated, then look for the test from above and reverse. But when there's no buy side rated, look for reverse. Look for the break, reverse, and put a setup right there. That's wonderful right there. So that is one of the setup we see so beautiful for today. Alright, I think save this. Let's see what else we need to cover. Alright, it's the trade number, the very first trade we make is also the same mistake like trade number 2. It's just the FOMO right there. Because we thought, wow, it's 830 right there, so that means it's just a pullback. It's gonna make a second leg up. But in order to trade a pullback, you have to see the setup. We just going jumping and buy right away. You see that? In the falling 9, it's just a FOMO trade. Is that? How come? You see, look at that. There's no setup for a retracement. If you want, it's a second leg up, let test below, or it's just any level, right? if you want it, you're gonna put right here, buy stop right here. You cannot just change like that. It's just, we completely automatic respond right there. And no wonder we took this kind of trade. So next time we have to be aware that our automatic response. Look for the setup. If not, then sit on our hand. You see that? Can you believe that? We go in and we buy right here. What in our mind? Buy right there. What's that? Why we buy right there? Oh, now we see how crazy we are. Or at least we lost control. We let the FOMO, drive us to make decision right there. But anyway, that's the huge lesson for July. We always learn. That's why we make practice, right? Practice, we can learn and make better decision. All right, I think that's it for today. And let's look at the 4 hour before we leave very quick. I mean, look at that giant response around, in the 13 hour right there. Who thought of that right there? You see that? So basically, wow. Let's wait. Next day, which is Monday, if it break the level, you see that? You see the gap right there? It's the bearish breaker right here. Let it above the bearish breaker, but when it break this, it's gonna come down, because break the level without break back that level without retest from below. See that the level? It's just break it back right away. No retest from below. So looking for a second, another leg down. That's what we anticipate right there. Anyway, we are. Thank you for your time and interest. We are always grateful for this opportunity, and we do what we love. Then success is coming our way. Bye for now, and have a great weekend. See you next week.